Welcome, Charter Board members and school leaders. This is the first in a series of 3 mini-courses on preventing audit findings. The 3 mini-courses cover how to prevent findings related to material misstatements, internal control over financial reporting, and legal compliance. The topic of this mini-course is how to prevent findings due to material misstatements in the school's annual audited financial statements. A material misstatement is omitted, incomplete, or untrue information in a financial statement or related notes that could affect the financial decisions of one who relies on it. Material misstatements may put the school at financial risk and lead to loss of confidence in board and school leadership. Would you like to review the law and gain ideas for preventing audit findings? Would you like resources shared by another charter school? This mini-course may help you. In this mini-course, you will review the law, gain ideas, test your knowledge, and receive a certificate of completion. When reviewing the law and ideas, think about how you can help prevent audit findings. Let's start by reviewing the law. Minnesota Statutes Section 124E.16, Subdivision 1A, states that a charter school is subject to the same financial audits, audit procedures, and audit requirements as a district, with a few exceptions. Minnesota Statutes Section 124E.16, Subdivision 1B, specifies that the charter school must submit an audit report to the commissioner and its authorizer annually by December 31st. The audit report must include a report on financial statements that show how regular and special education were financed in the short term, as well as what remains for future spending. The school must prepare financial statements for the audit and prevent, detect, and correct misstatements in a timely manner, whether due to error or fraud. The auditor expresses opinions and includes notes on the financial statements that the school prepares, based on the evaluation of the audit evidence obtained. If there are no material misstatements in the basic financial statements and the notes to basic financial statements, the auditor's opinion will be clean. To summarize, what are some important points to remember when taking action to prevent audit findings due to misstatements? Charter schools are required to submit an audit to the Education Commissioner and Authorizer by December 31st each year. The audit must include a report on financial statements. A material misstatement is omitted, incomplete, or untrue information in a financial statement or related notes that could affect the financial decisions of one who relies on it. An example resulting in a misstatement is forgetting to record a financial obligation, such as employee compensated absences, as a liability. Another example resulting in misstatement is not recording special education expenses to the correct cost objective code. Incorrectly coding a general education paraprofessional's compensation to special education could result in a material overstatement of special education revenue. The auditor will issue a finding if material audit adjustments were necessary in order to correct misstatements such as these, because the school did not prevent or find and correct the errors. While it is acceptable to outsource accounting functions, the responsibility for preventing misstatements cannot be outsourced and ultimately remains with the board. What are some ideas that may help prevent audit findings due to misstatements? Examine the school's bank reconciliation statement each month to help eliminate the risk of unrecorded transactions and transactions recorded in error. A bank reconciliation statement is a summary of banking and business activity that reconciles the school's bank account information with the school's own financial records. Any differences in information about deposits, withdrawals, and other activities must be justified. And when there are no unexplained differences, the bank statement has been reconciled. have an internal control policy over annual financial reporting to prevent or detect a material misstatement of the annual financial statements. Ensure that management has developed and implemented controls to prevent, promptly detect, and correct misstatements. Ensure management follows and receives training on accounting principles generally accepted in the United States of America. Use the most current summary of audit requirements from the Minnesota Department of Education and the Legal Compliance Audit Guide from the Office of the State Auditor to help monitor audit work. Verify that management starts early to prepare the financial statements for the audit, to minimize errors and provide time to correct errors. Engage the auditor early in the year so that there is time to provide all necessary evidence and identify and correct any misstatements. Following are questions that you may want to ask to help prevent audit findings due to misstatements. Who on the school's management team has the expertise to prepare financial statements and prevent, detect, and correct misstatements? What training does school management need and receive to build capacity in this regard? When did school management meet with the auditor to plan for the audit? What components of the audit are left to complete, and what is the schedule for completion? What, if any, findings related to misstatements did the school have in prior years, and how is the school preventing them now? What controls are in place to prevent and detect material misstatements in a timely manner? Does the board examine a reconciliation report each month to verify that any differences between the bank statements and accounting records are explained and reconciled? Why is it important for the board and school management to engage the auditor early in the spring of each year? Why is it important to verify that a plan is in place for submitting all required audit components? Why is it important for the board and school management to meet with the auditor after the audit? Why is it important to prevent audit findings? Now that you have reviewed the law, learned ideas from other charter boards, and considered questions, let's take a look at board issues you can help prevent. By planning ahead for the required annual financial audit, you can support management in preventing and identifying mistakes that could cause misstatements. By verifying that any differences between the school's accounting records and bank statements are reconciled monthly, you can help prevent misstatements. By understanding how misstatements occur, you can help ensure that management gets the necessary training and assistance to prevent them. In conclusion, here are some potential next steps. Ensure management has the expertise and skills to prepare financial statements for the audit and to prevent, detect, and correct misstatements in a timely manner. Read the Legal Compliance Audit Guide for Charter Schools, published by the Office of the State Auditor. Read the most current summary of audit requirements, published by the Minnesota Department of Education each year. Verify that an auditor is engaged early in the fiscal year and that a pre-audit planning meeting occurs. Examine a reconciliation report at each board meeting and verify that the bank statement and school's financial records are consistent and any differences explained. Work with management to create an internal control manual that the board reviews to verify that controls to prevent misstatements are in place. Examine and discuss the management discussion and analysis included in the annual audit report after the audit is finalized. Analyze all past misstatements identified in audits and ensure that corrective action plans are in place to prevent any past misstatement from happening again. Contribute your ideas and tools for achieving a clean audit to help other charter schools. Information in this video is not intended to address specific questions or issues a particular school may be facing. Charter schools should work with their authorizer, auditor, financial service provider, and advisors, lawyer, and staff to address any specific issues and to obtain additional resources. We hope this information is helpful in preventing audit findings.